Okay, yeah, so we should be live right now. So yes, hi everyone. Thanks for joining in. Hello. Hi everyone. Thanks for joining in tonight for this special CNY session, right? So if you can hear me loud and clear, can you just type in CNY? Type in CNY inside the chat so that I know that you guys are able to hear me loud and clear. Okay, yes, please type in CNY so that I know that you are watching this and you can actually hear me loud and clear. Okay, fantastic. Yes, thanks for the response. So I see Darwin, Kelvin, JK, Lucinda, as well as Kelly, Nicholas, Celine, Han Hong, Luciana. All right, it's good to be back. All right, so first of all, just for a start, just to wish everyone a happy CNY, happy Chinese New Year. And of course, I think today is also a very special occasion as well. I think it's also the birthday. You know, all of us, it's also our birthday. So happy birthday to all of us. Okay, so Celine is asking, so where is baby investor, right? So yeah, apparently, I think it has been some time. I think it's been about 2 weeks, okay, 2 to 3 weeks since we last invited baby investor, and apparently, I wanted to invite baby investor out today, but it seems like he's not ready yet. Okay, I think probably he ate too much, so now you cannot recognize him. Yeah, so baby investor, he actually Ponten, okay, we call it Ponten, or we call it, he he decided to not turn up. Yeah, so don't worry, okay, today I'll be here. So let me just go and rename myself. Okay, yeah. So yeah, baby investor is not here today. We have the so today a bit different. Today don't have baby investor. Today got handsome investor. All right. So yeah, thanks everyone for joining us this evening for this special CNY. And of course today I just wanted to take advantage of this period as well to of course say hi to everyone. And of course at the same time, like I said, I think a lot of us who are currently invested into the market, there are definitely a lot of questions on where the market is heading. Is it going up, or will it continue to go down further? And of course, what are some of the potential opportunities for us to invest right now if we were to want to start investing, right? So today, I just wanted to start off this whole session with a company that actually caught my attention. And after running through some of the numbers, I think this company actually is at a very attractive pricing right now, okay? Not only that, I think with the current volatility in the market as well, there are also some strategies that you guys can actually apply to take advantage of all the uncertainty that's actually in the market, which is also something that I will be sharing with all of you. So today I'll be sharing with you one company. I'll be sharing with you exactly the strategies that you can implement to take advantage of the current volatility. And of course, last but not least, we are going to do a giveaway. Okay, so for those of you who are watching this right now, there will be a giveaway that is going to happen towards the end. Okay, that's going to happen towards the end. In fact, maybe in about 15 minutes, I will let you guys know what is the giveaway all about and how you guys are actually able to participate in this giveaway. So be sure to actually continue to join me on this Facebook Live, at least for the next 15 minutes, okay? I can assure you that this giveaway is worth a lot of money. It's something that we have never given away before because it's worth money. And of course, because of Chinese New Year, so I think everybody's feeling generous. So this is something that we would love to do for you guys. And of course, I think it's been some time since we have last catch up with each other. So again, this is really like a 2022 special giveaway for all of you who have been following us on Facebook as well as on our Telegram as well. So without further ado, let me just bring up my presentation slide, okay? Something that I have just prepared to share with all of you. So today's session will not be very long. I'll probably keep it to about half an hour maximum. So you all still can enjoy your, I know some of you probably start work already, so you will be able to enjoy your holiday. I mean, not holiday lah. Enjoy your sleep. Seems like my brain is still not entirely working, but it's okay. All right, yeah. So as you can see, I wanted to invite this cute baby investor, but don't worry, today no cute baby investor. We have the handsome investor, which is also fine. All right, so if you can see my PowerPoint, can you just type in 888 inside the chat? Okay, if you can see my PowerPoint, can you just type in 888 inside the chat? And once I see your response, I will actually start off the presentation. So some of you is asking, Bowen, COVID-19 antibody. Yeah, probably after the COVID, a bit different. Baby run road already. maybe. Yeah, I can't contact him. Okay, yeah, baby went to collect ang pao. Yes. If y'all want to give baby investor some ang pao, later I'll put his bank account. Y'all can send it to him. He'll be more than happy to be blessed with all of your ang pao. All right, so thanks everyone for the response. So let's get started. Okay, so for today's sharing, this will be pretty much the format. I will start off with the CNY stock of the day. There'll be one company that will be shared, and the second one is basically the strategies that you can actually apply to take advantage of the current volatility in the market. And last but not least, okay, we will still have a short Q&A for you to actually ask any of the questions that you would have. And of course, like all presentation and sharing, whatever we shared today is purely for education purpose only. So make sure that you do your own due diligence before you jump in. All right, so the company that I'm going to share with you, right, okay, because it is so exclusive, it is so classified. So I'm not going to release what is the name of this company first, okay? But what I'm going to do is I'm going to share with you some of the company information and background. Of course, you can make a guess. And right towards the end, okay, that is where I will disclose, okay, what is this company name, right? So why I wanted to do this is also because I think some of us, we can be very fixated, to the brand of the company. Sometimes we see this brand, we like it. If we like it, we will just keep buying it. If we don't like it, we will avoid it. But end of the day, I think as investors, we have to put aside some of these feelings that we have, with regards to any of the company that we invest. What we want to do is really to look at the numbers, because numbers don't lie. All right. So this is something that we'll be doing. So this particular company, it is operating in the fintech area, okay, in the fintech industry. So for those of you who are familiar, maybe you can already start to put in what are some of the companies that belongs to this category. I don't think it's going to be that difficult to guess, okay, but y'all can just type in what are some of the possible guesses. Companies in the fintech industry. Now with this, okay, so these are some of the companies that are subsidiary of this particular branding, which you guys will be familiar with. Okay, so as you can see, this company in the fintech industry, it is actually pretty huge. So they have, for example, peer-to-peer payment. So how I transfer money to you or how you transfer to me, right? So that's under this branding called Venmo. They have a digital reward platform, okay, to reward people who are using the digital transaction. Okay, that's Honey. And of course, we have, what else? We have Zoom and Hyper Wallet. We have GoPay, Braintree, iZeta, Simility. Yeah, so again, there are a lot of subsidiaries under this particular brand. Again, y'all can just Google that. The answer will be there. Yeah, some of you who are a little bit more savvy, you will already guess it correctly. But don't worry, for those of you who don't know, just continue to follow me through. Yes, so not only the company above, which I've actually shared with you. So this company is also on a buying spree. Okay, so most of us, we go and buy clothes, Chinese New Year clothes, Chinese New Year goodie. This company go and buy other company. All right, so as you can see, late last year, they actually bought into acquire this Japanese company called Paydi, not Payli, Payli, yeah, Paydi. So Paydi actually they paid 2.7 billion, which is I think quite a decent amount. So this particular company is doing the buy now, pay later market. So as you can see, what is buy now, pay later? Basically, this particular payday platform, it offers installment packages, okay, by default. So which means that after you purchase your goods, okay, you don't have to pay immediately. It will automatically split into 3 payments, which you can then pay subsequently, like pay later. So again, I would say that this would actually be pretty powerful, okay, especially in current market context where I think a lot of us we love to buy stuff lah. Okay, and the best feeling is you buy now and then you don't have to pay now, you can pay later. So I think this is also one of the key strategies for COTS. Okay, for those of you who are familiar, COTS are actually doing pretty well, okay, because they actually have this installment facility, okay, for their customers. Right, so I would say that this buy now, pay later format actually is pretty popular and is getting more and more widely used, okay, in terms of one of the payment method. So as you can see, Payday has actually 6 million registered users. So by acquiring Payday, it actually gives this company access to the Japanese market. And of course, this is an industry that is still growing really, really fast in Japan itself. All right, and if you look at this particular company overall, in terms of the total active user, the number of users that are using each and individual of its services, first of all, you want to look at the trend. You can actually see that over the last 10 years, okay, the number of users is definitely increasing. Okay, and I would say that it is actually increasing in an exponential way. It is actually getting more and more, there's actually more and more users, especially towards the last few years. If you look at the total numbers right now, okay, they have actually 426, okay, not 426, they have 426 million users. So this is not a small company. I would say that they are pretty huge. Okay, this is a pretty huge company. Next, we also want to make sure that, when there's more user, it also generate more volume, okay, because volume will also reflect to so-called transaction fee, which is in a way the revenue and also the profit driver for this particular company. So if you look at the total payment volume for this particular company, same thing, you can see that it has been increasing tremendously. And over the last few years, the slope and the gradient of this increase is actually getting even more and more faster. It's getting faster. So right now, if you look at the based on the latest quarter, okay, it's actually at 309 billion, okay, total payment volume. So that is, again, I would say if you look at the overall trend, they are actually growing pretty well. Now, if you look at the numbers, okay, for this particular company over the last 5 years, the average earnings growth, that means the year-on-year growth, okay, on average over the last 5 years is 26%. Okay, 26%. So for me, whenever I invest in a company, I think one thing that we want to look at is at least go for a double-digit growth. Double-digit growth will definitely be something that we will be looking out for. So if you invest in the companies that is growing at less than 10%, pretty much you probably want to invest in them for dividends, or you want to invest in them for some other reasons, okay? But other than that, as the company grow, as the company has like double-digit growth, that is where the share price will also reflect, okay, the growth in the company as well. So for example, if you want to invest in any company 10 years ago, if you actually pick some of the growth company, that's where most of the profit would actually be made, instead of investing into the dividend company where they can be stable, but the earnings is also, the profit is also more stable. Okay, you won't be able to get a double-digit growth in your portfolio as well. So for this company that is growing at 26% over the last 5 years on a year-to-year basis, I would say that it is pretty amazing. Okay, pretty amazing. Now let's look at also some of the financial position in terms of are they having a lot of debts, and how's the cash position, etc., etc. You will be able to see that their cash holding, okay, actually in the short term, okay, these are some of the short-term debt as well as some of the long-term debt. So they actually have a lot of cash. They have a lot of cash. And if you look at the assets versus the liability, both short-term and long-term, the assets is actually above the liability. So this company, based on what I remember, the liability, the debt that they have is, if I'm not wrong, is based on this long-term debt, like 11 billion. The amount of cash holding they have is 50 billion. So which means that easily they can pay off the debt that they have. So again, in terms of a cash position, financial health, this company is in a very, 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 very strong position. Okay, so a lot of money, don't have to worry too much about the financial health. Now, I think everybody is also focused on the valuation, okay? How expensive or how cheap is this particular company? So if you look at the current PE ratio, it is actually not very low, okay? It's actually trading at a PE ratio of 35, which means that P ratio of 35 also means that when you invest in this company, it will take 35 years for your money to break even based on the earnings itself. Okay, but that doesn't mean that, you know, your money will only take 35 years to make back 100%. You know, but on average, if we just use 35 as a benchmark, the higher the number, the more expensive it is. The smaller the number, the better, the cheaper it is. So at 35 itself, if you were to compare it on its own, it can be on the higher side, okay? Because I would say a good benchmark, okay, would be investing into a company with PE less than 15, 1.5. You know, so for 35, it seems to be on the higher side. However, we have to understand that different company, different industry, they have different benchmark as well. So if you were to look at this particular company itself, right, you would be able to see that on average, over the past few years, the PE ratio is way higher than above the current rate. Okay, if you look at the 5-year average PE ratio, so the average of the last 5 years is at about 59. And right now, this company is trading at a valuation of 35. So based on this particular company itself, you can actually see that the current valuation is considered undervalued. Okay, it's considered undervalued. Same thing if you were to look at the price to sales. Okay, if you want to look at sales revenue growth, you will be able to see that, you know, the past 5 years is at about 8.9 times. And right now, this company is trading at about 5.89. So I would say that this company is definitely not expensive. It is undervalued. Is it super cheap? I mean, cheap can become cheaper. This is something that we have to understand. But at least if we were to, you know, look at it from an average perspective, I would say that the current valuation makes good sense for us to actually take some additional look at this particular company. Yeah, so by now, I think some of you already have guessed it correct. Okay, what is this company and what is the, you know, and yeah, exactly which company is this? So I think without further ado, yeah, it's very straightforward. This company is actually PayPal. So why this company actually caught my attention is because I think personally for me, I love to look at, I mean, financial payment system is actually something that I am pretty optimistic. Okay, because as we can see, the number of people who are using who are doing online payment is increasing. And that is not all, okay? Especially nowadays, we know with inflation happening, what it means is that things is going to become more expensive. So when you buy your Shopee, when you buy your Lazada, you buy your AliExpress or whatever, okay, anything that you buy online, things are going to become more expensive. So this company is going to do the transaction for you. So when price increase, the transaction volume is going to increase, and they get a cut out of this, which also means that they will get to earn more money. So the higher the inflation, the better it is. Okay, the better it is. And of course, we all know that COVID is actually still ongoing. Okay, so which also means that online payment is going to be something that will still be highly utilized. Okay, will still be highly utilized, whether is it, you know, if you're buying food, you probably have to get a delivery, you know, and these are things that once you get used to it, it's very difficult for you to move back to the original way. You know, nowadays, even when we go out, if given a choice, will you use cash or will you actually use a credit card? You know, I think credit card will always be the default payment as long as the vendor allows you to actually use it. And moving forward, I think with more and more payment system and technology, you know, you don't even need to carry your card. In fact, nowadays, if you actually synchronize your credit card or even some of the payment gateway to your handphone, all you need to do is basically just bring your phone around, and you know, you'll be able to make payment in fact anywhere. And I think we all know in China, even the mama shop, even you know, everywhere on the street lah. Basically everything is all digital payment. Literally, if you carry cash, okay, the vendor will tell you that, hey, I don't actually have cash. Can you actually do a digital payment instead? So I think in many different parts of the country, these are still we are still adapting to the digital payment. So which also means that this is an area that will continue to grow moving forward. It is not an area that is already highly saturated. Okay, in fact, for example, in Japan, it is something that will continue to grow, and I think they have actually a huge market that they can actually address moving forward. So I think they are definitely in the right space. I think some of the concern that you guys might have is that with blockchain and of course with cryptocurrencies, will there be a chance whereby the crypto market is going to disrupt this or rather the DeFi? Are they going to disrupt PayPal, etc., etc.? For those of you who are familiar with it, I think there are quite a number of news as well. PayPal is also looking into creating their own cryptocurrency. They are looking into creating their own coin, okay, which is actually a stable coin, which is actually pegged to the US dollar. So, we all know that stable coin is pretty much more, I would say people view it as something that is safer, okay, as something that's actually safer. So, which also means that PayPal is already into the crypto space as well. So, which also means that as more and more people are moved into this particular space and using cryptocurrencies for transaction and things like that, I would say that PayPal would also be in a good position to take advantage of this growth and potential and opportunity moving forward as well. So they do actually have a stake in the game as well. Right, so this is the company. Now, very interestingly, let's take a look at the share price, and why it actually caught my attention is because I think over the last few months, okay, it is not just this company that has gotten a hit. I think most of the growth company, the tech company, has actually taken a fair hit. If you look at some of the payment gateway, okay, some of the competitors of PayPal like Visa, MasterCard, quite a number of them has actually fallen a fair bit. Of course, for Visa, MasterCard, recently over the last few weeks, they have actually recovered slightly. Okay, they have recovered slightly. But PayPal, because of the recent earnings call, it actually reported of slightly lower growth guidance moving forward. So because of that, what actually happened was that the market kind of overreacted. Okay, you can see that the share price from about 170, it actually dropped all the way to 126 okay, which actually makes the valuation even more attractive. I mean, at 170, I would say it is already pretty attractive. With the recent drop, I would say that it actually create even more opportunity for us as an investor to actually invest into this particular company. So this is basically the company that I have, and of course later on I'm going to show you how you can actually invest into this company and how you can actually take advantage of the volatility in the current market to actually purchase this company at an even better price. Okay, instead of buying at 126, 127, I'm going to show you how you can actually buy this company at around $120, and in some cases you can even buy it at even below 120 and maybe about $115 and $110, right? So this is going to be something that I'll be sharing with you after I announce the giveaway. All right, so like what I've promised, okay, I am going to share with you guys, okay, the giveaway for today. So for those of you who are still here, if you are excited about this giveaway, okay, all you need to do is type in GA. Okay, type in GA inside the chat. So once I see a lot of you typing giveaway, and then I will actually announce how you can actually participate in this giveaway and what is the gift basically. I think that is very, 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 very important. Okay, great. I see all the GA. Wonderful, right? So let me share with all of you the prizes, okay, first of all, okay. So I'm going to bring up my screen. All right, so for those of you who are familiar, okay, basically I have two program which I am running. Okay, one of them is the Trend Investing Masterclass. So this is a 2 days program that I run, okay, together with my team. Okay, so that is 994 lah. Okay, so today, not this one lah. If this one I do give away, I think my partner will kill me lah. Okay, yeah, but basically, whatever I shared with you today, okay, in terms of how do we look at the numbers, how do we look at the financial, and also the execution strategy, which I'll be sharing with you later on. Okay, everything is actually recorded inside this particular online platform called Build Your Ultimate Cash Flow using the flow strategy in 7 days. Okay, so as you can see, this courses, if you were to subscribe to it, okay, it is 97 US dollar, which is about 100 over Singapore dollars, right? So as you can see, what are some of the things that you will be able to learn? Okay, for example, how to understand business fundamental, okay, and how do you actually select, okay, this one is actually valuation, a valuation method, and also the price to enter. I have 2 strategy which I will be sharing with you inside this online course as well. All right, and of course, how to generate monthly cash flow using this powerful option strategy. So as you can see, okay, these are all the videos that you will actually be able to access. So just as I mentioned, this courses, if you were to actually go and subscribe to it, it's actually 94 US dollar. Okay, let me just check, make sure it's US dollar. Okay, or Singapore dollar. Okay, Singapore dollar, sorry, Singapore dollar, $94. All right, so this is going to be the giveaway for today. Okay, how are you going to be able to get this? Okay, I think today, yeah lah, I just want to do some giveaway lah. So I'm going to make it a sure win giveaway. Okay, can y'all type in sure win inside the chat? Type in sure win. Okay, I think some of you over here, you actually already purchased this program as well. You actually paid for it. So please don't kill me for doing this giveaway. Like I said, I don't do it. I have never done it before. I think this is going to be the one and only time that I'll be doing this because of Chinese New Year. So maybe the next time I do it is 2023 CNY period. Okay. So what is going to happen is that, okay, how are you able to participate and get this online course for free? Okay, is all you need to do is just basically share this particular current Facebook Live on your Facebook profile. All right, so for those of you who actually share it, I will actually contact you after this video has ended, and then I will actually give you a special code that you can enroll for this entirely free. Okay, entirely free. Again, like I said, this program is actually worth $94. All the strategies that I will be sharing with you later on will also be shared inside this video as well. So which means that you can actually rewatch them, and there will be some additional powerful strategies inside this platform as well. All right, so all you need to do is just share this video out. Okay, and then after this, I will go and check how many of you have actually shared. So one thing to take note, okay, some of you, when you share it, you actually share it privately. So when you share privately on my side, I cannot see one. Okay, so this is just to let you know that you have to share to public, okay, on your profile. And once you share it out, I will be able to know who has actually shared this video, and I will PM you within the next 48 hours, and I will give you a special code for you to get this online course for free. Right, so that is the giveaway that we are doing today. So yeah, hopefully y'all will love this special present, and of course y'all can, after CNY, can watch the video as well. So I feel that whatever I share inside this online platform is very, very useful, especially for those of you who are looking to start investing. Okay, how to actually pick the right company, how to know what is the right pricing to enter, and of course, how do you actually execute, the strategies that can generate monthly cash flow as well. All right, so very, very powerful. So now I'm going to go back to my slide. I'm going to show you what is the strategy that I will be doing. So I'll be bringing up my trading platform. Okay, so the method that I will be sharing with you, okay, is actually selling put options. Okay, can everybody just type in sell put inside the chat? Type in sell put inside the chat. So for the benefit of everyone, okay, and for the benefit of those of you who are not familiar with options, okay, I'm going to just do a quick introduction about how this options thing works, okay, and later on I'm going to run through one time okay, on the platform itself, how you can actually execute it and how much money you are able to generate using just about 5 to 10 minutes of your time. Okay, so this is very powerful. This is also one of the methods that Warren Buffett actually used to build his wealth. Okay, this is something that my mentor, Mary Buffett, actually shared with us. So I actually spent a lot of money to learn all this strategy. But for today, I'm going to actually share with all of you very openly. So I hope you all actually benefit and also to be able to make money together. Okay, that's great. And thanks everyone for helping us to share it out, right? So don't worry, later on we will be able to track who actually shared this video out. So once again, thanks everyone for helping us to share it out. So, okay, selling put options, okay, how it works is basically, first of all, in order for you to sell a put option, you have to find a solid company that you don't mind buying it, you don't mind owning it. So as mentioned earlier on, okay, when we look at PayPal, I think PayPal is a company that, I look at the financial, everything looks good. Okay, I look at the prospect of this company. I love it. I love the fact that it is actually in a good space, okay, that I like. And we have actually saw that, they have a past 5 years growth rate of about 26. I do see that based on the recent earnings, they do expect the growth rate to drop, let's say, to about 15 to 20%. Even with that, I think personally I'm comfortable with that growth rate of 15 to 20% moving forward. Anything higher to me is a bonus. All right, so first of all, it must be a company that you're comfortable to invest in. You see the prospect moving forward. Secondly, okay, the pricing of the company, you do not want to buy at a very expensive price. Why do we actually want to buy low? Actually, the fundamental issue is this. Let's say today I found a stock at $100, okay, and I expect the price to go up to $200. So from 100 to 200, what is my ROI? Can you just type it in? Okay, if I see this current company, I love it a lot, $100. I see that it has the potential to go to 200. So from 100 to 200, what is the potential ROI? You can see it's 100%, right? Okay, so from $100 become $200, you make 100% return. What happened if, let's say today, okay, because of some bad news and things like that, okay, the stock actually dropped to $50. Okay, so because of some news, okay, the price dropped to $50. But did my own judgment and analysis of the future potential price change? The answer is no. I still see that this company can grow to $200. So if I manage to buy at $50, right, can you see that my risk right now is actually lower as compared to buying it at 100? Because if I buy 100, potentially my maximum risk is I'm going to lose this $100. But if I buy at $50, technically my downside is only $50 lah. But what is my upside? My upside is actually this $50. Potentially, based on my forecast, it is going to become 200. So 50 becoming 200, what is the return? Okay, you realize that it's actually a 400% gain. Okay, it's going to grow 4 times that, so which actually gives you a 300% ROI. Right, so you can see that when you actually buy a stock at a lower price, it reduces your risk because you're buying it at a lower price range. And when it actually goes up in the future, you would have an even higher potential ROI and return as well. So this is why I would say that even though today we say that, yeah, I think this company 10 years later, it will confirm go up, man. But if you can actually buy this company at a lower price, the multiplier effect that you can actually get, the ROI that you can actually generate is going to be even more attractive. Okay. So again, when we look at PayPal as a company, as a valuation, we have actually seen that if you compare to the last 5 years, current valuation is considered undervalued. Okay, so again, I think at the current price of $126, actually it is pretty attractive to me. That means I actually don't mind buying it right now at $126. Okay, so this is something that we have to be clear before you apply this strategy. First, the company is something that you believe in the next 5 to 10 years, it will continue to grow. The second thing is at current valuation, at current price, it must be a price that you don't mind buying it already. Okay, so this is 126. So how can we actually buy this company at an even lower price? Okay, potentially lah. Okay, and for some of you, you want to generate monthly passive income. How can you actually do it? So the strategy that we're going to apply is selling put options. So this is basically an option chain. Okay, so for those of you who are familiar with options, basically you can see if I want to buy stock, Okay, it's actually over here. All I need to do is just click this. I can actually buy stock right away. So just for all of you to understand, okay, for those of you who are new to the stock market, when you invest in the US market, you can just buy one share. So for example, the share price of PayPal is 126. In fact, it's actually 127 right now. Okay, market has already gone up. So how much money do you need to invest in this company? The answer is 127. In fact, nowadays, why so many people are jumping into the stock market? The best thing that is happening right now is that there is zero commission. Okay, yeah, I know some of you cannot believe it. Where got zero commission? They also need to earn something, right? But yeah, it's actually the truth. Today, when you actually invest in the US market for this particular platform, they don't actually earn any commission from you. So which means that $127 is the share price. That's all you need for you to purchase. So if you want to buy a share, this is what you can do. Okay, so now I click at 10:30 p.m. when the market open, I will actually have one share of PayPal. But of course, today, like I said, I want you guys to be able to earn passive income. Okay, or in some cases, we want to be able to buy this company at a lower price. So what we want to do is we want to go to the option chain. We're going to use option to help us to actually work to our advantage. So the moment you go to option, one of the things that is a little bit more confusing is you realize that there's a lot of different expiry date. So think of option, right, as like a piece of contract. So every contract, there are many different contracts with different expiry date. So that piece of paper is going to expire at different date. So when you are selling a put option, basically what you're doing is you're promising somebody that you're going to buy the share at a particular price. Okay, I repeat, when you're selling a put option, basically you're giving somebody else a promise that you are going to buy the share at a particular price. Okay, so you actually promise them that, let's say for this particular example, I'm going to look at the 39 days. So 39 days basically means that from now until 18th of March, okay, I actually promised another party that I am going to buy PayPal share, okay, at $125. Okay, I promised this person, I'm going to buy PayPal from you at $125. Okay, so right now you'll be thinking, how come that person will be so stupid, right, to sell me, to promise to let me buy at 125 when the current share price is 126? So what is happening, right, is that the other party is actually buying an insurance. Okay, because we all know that right now the market is very volatile. So the other party, right, he is afraid that this particular stock is going to drop even more. Maybe it will become like Facebook, drop 20%. Okay, so in order for that particular party to protect his share price, okay, he bought an insurance. So he buy insurance, and he protect his share at $125. So I want you to imagine, okay, from now until 39 days later, okay, let's say now the worst case scenario, the price really dropped to $100. What is going to happen is that, right, okay, when the price dropped to 100, the other party, okay, that I actually sold the put with, that means I had this agreement with, he's going to come to me and say that, hey, Bowen, remember you actually, I actually give you this contract. What happened is that right now I want to exercise this contract, which means that I want you to buy PayPal share from me at $125. Remember, the share price at the point of time is actually 100. But because of that contract, I am obligated to actually pay him $125. So that's something that when we actually do this contract, we have an obligation to purchase it at the agreed price. As you can see, you can actually agree on different price. But let's say I'm going to use this 125 as an example. If I use 125, it means that I'm going to pay PayPal at $125. So as you can see, from now until 39 days later, what happened if, let's say, the share price stays above 125? Okay, is the other party going to find me, okay, and ask me to buy from here at 125? The answer is no. Okay, the answer is no. All right. So what is actually happening over here? I'm going to show you how you guys are able to make money using this strategy. So what happened is that when we actually give somebody this particular promise, right, to buy PayPal share at $125, they are going to pay us some money. Remember, the other party is buying insurance. So we are now like the insurance company. We sell insurance. So when you sell insurance, what do? You collect premium. Okay, you collect premium as an insurance company. All right, so I want you to imagine right now, you're all insurance company. You actually write this particular contract. Okay, I promise to pay you PayPal. Okay, I promise to buy PayPal from you at $125, and this contract is going to last 39 days. Okay, in exchange for this contract and promise that I'm giving you, you are going to pay me $7.05. Okay, 705. So for some of you, you will be thinking, wow, Bowen, $7 are like not a lot of money. Okay, so this is something that we have to understand. Okay, every options contract represent 100 share. Okay, so everything over here you have to multiply it by 100 lah. So which means that when you actually sell a put for this particular contract, you have to make sure that you have got $12,500 in your account. Okay, when you actually do this. All right, so this is something very, very important. And how much money do you actually collect when you actually give somebody this promise? Okay, so 705 is actually the premium. So if you multiply by 100, you will realize that the amount that you're collecting is $705. So which means that by giving this person a promise, okay, you straight away collect $700 and $705 inside your pocket. This is immediate. So again, some of you will be thinking, well, Bowen, $700, like not a lot of money. Okay, let's look at the percentage. Let's look at the percentage. Okay, relax. Don't need so big. Okay, so how much ROI are we actually able to generate from this particular? So remember now, for example, you have $12,500 that you are willing to set aside for this particular strategy. Okay, and you're going to collect $705. So we're going to take 705 divided by the 12,500. Sorry, 12,500. Oops. 705 divided by 12500. Can you see that for this particular strategy, okay, for this particular strategy, your ROI in 1 month is actually 5.6%. Let me ask you, 5.6% in 1 month, is that good or bad? If you think it's good, can you just type in G? If you think it's not good enough, then you type in B, B for bad. Generating 5.6% in 39 days actually is super good ROI because you realize that this strategy can actually be done on a month-to-month basis. So every month you can actually repeat this. But why I say that right now is actually a very good opportunity, because as volatility increase, this percentage increase, which means that if you were to do the same strategy last month, maybe the return is about 2 to 3%. But right now, because everybody is fearful, okay, when people are fearful, they buy more insurance. They are willing to pay more for insurance. So which also means that as an insurance company, when there's a lot of fear, they actually get to collect more premium. Okay, they get to collect more premium. So this is something that we have to understand. All right. So by doing this, okay, immediately you can see that when I actually click this, when I confirm it, immediately can you see that the amount of money that I'm going to collect is $705. So I think by now you'll be able to understand now what is the worst case scenario. The worst case scenario that's going to happen is that if the price drop below 125, you are going to basically buy over the share price. You're going to buy at $135. But remember, originally we wanted to buy this anyway. Okay, we wanted to buy at 126 earlier on. Okay, so if let's say today you really purchase the share price at $125, okay, is that a bad thing? It's actually not a bad thing, right? Because you wanted to own this anyway. Okay, and don't forget, because of the strategy that you applied, you actually collected $7. So technically, okay, even if let's say today you get exercise, what is the buying price or what is your cost price of this particular share? You realize it's actually 125 minus $7. So technically, just by applying this strategy, worst case scenario, you are going to purchase this share at $118. Best case scenario is the price go up and you just collect $705, and 39 days later, this contract disappear. Okay, this money is yours forever. So that is basically what is going to happen. Whether the price go up, you're going to get the free premium, Or if the price goes down, you get to own PayPal at $118, which is something that you don't mind owning in the first place. Okay, then you just basically hold it lah. So if you feel that this strategy is pretty powerful, can you just type in P inside the chat? Okay, type in P inside the chat. Actually, another company that I wanted to share with you is this company called Square lah. Okay. So of course today I don't really have much time, but I would say that PayPal and Square is in a similar industry, okay, except that they serve a little bit different customer base. All right, and so I also do see that Square has got huge potential as well. So the share price is slightly a little bit lower. Okay, so you can see for Square, the ROI is actually even higher. Okay, let's take a look. You can see if you were to, the current share price is 108. If you were to sell a put at the current price of 105, slightly lower, the premium that you collect is 10.4%. You can actually go and take a look at the ROI. 10.4 divided by 105. Okay, this particular company actually gives you 9.9%. Okay, 9.9%, even higher. So some of you will be wondering, why is it that this company actually gives even higher? Okay, I do believe that one of the key reasons is the earnings of this company should be coming up. Okay, let me see if I can find. Okay, Square earnings. Okay, yeah. I believe that, yeah, Feb 24th, Feb 24th, right? So this company is actually going to announce earnings in about a few weeks' time, right? So whenever a company is near earnings, okay, again, there will be more volatility. People are a bit fearful, they scared another Facebook drop 20%. Okay, so more people go and buy insurance. So as a result of it, you can see that the volatility of this company is actually very, very high, right? So when the volatility is high, you can actually generate even higher premium. So as you can see for Square, right, just by applying the strategy that I shared with you earlier on, okay, instead of buying at $105, actually just by clicking it, straight away that your cost price for buying this, right, is become $95 only. Okay, $95 only. And yes, this company changed name to Block. Thanks, Jackson, for sharing. Yeah, still very used to Square. Okay, now, yeah, Square and Block actually represent the same thing. Okay, so again, for those of you, let's say you want to be even more passive. Okay, you just want to collect more premium. You just take it like a dividend. Okay, what you can do is you can go a little bit longer. So we'll be looking at maybe about 6 months or even a 1 year expiry date. So let's say we use Square as an example. Let's say we go for a 6 month. Okay, so 6 months you multiply 6 times 30 is about 180 days. So let's go for about 221 days. Okay, let's just go for the 1 year one. Okay, 347 days. So you can see normally today when you invest in a dividend company, how much dividend do you collect, especially in Singapore? 4%, 5% a year. Okay, so today if you were to just do a 1 year put option for this based on $105, how much are you able to generate? You all can go and see the percentage. 22.3 divided by 105. The return that you're actually able to generate is 21% in 1 year. Okay, in 1 year. So again, by now you will realize that why we actually ask you to do 1 month, right? It's because you can see 39 days, you make 10%, but 1 year you make 21%. So theoretically, if you go for the shorter one, you're actually able to generate higher ROI. But for those of you who wants to be more passive, that means you just say, hey, actually, I don't mind 21%. I just want to do this, and then I can relax for 1 year. Then you can actually apply a 1 year option. Okay, which means that within this 1 year, if the price goes above 105, technically you don't really care much. You just happily collect the $2,000 interest and then spend it. Okay, in the case, if let's say the price actually drop, technically you can see that you get to collect this company at about $83, which is even more attractive. Okay, which makes it even more attractive. All right. So this is something like I said, it can be very passive. For those of you who wants to be a little bit more passive, you can just go for long term. I would say that the ROI that you're able to generate is way better than any dividend stocks or dividend strategies. All right, and for those of you who don't mind to be a little bit more active, okay, you can actually go for slightly shorter, about 1 month or maximum 2 month kind of expiry. Okay, so this is something for you to take note. Now, usually we go for about 1 month. That's where you can generate the highest ROI. Okay, so that's something that I wanted to share with all of you. Again, like I said, all this video on selling put option and in terms of the strategies, okay, I actually have it inside my online course. Okay, so of course, for those of you who actually help us to share this video out today, you are going to get this online course entirely free. I'm going to just give it to you for free. It's actually worth 94 Singapore dollars. All right, so right now I'm going to just give you guys a little bit of time to ask any question. Okay, so if you have any questions, do keep it coming inside the chat, and I'll be here to answer. While waiting for the questions to come, I just wanted to reiterate some of the game plan that I have for 2022. Okay, for those of you who didn't manage to catch it earlier on, I think a few weeks back. Okay, I mentioned that this year is all about accumulation, opportunistic, and to divest my investment. So what do I mean is that I'm actually going to start investing into some of the mega cap, okay, like Facebook, Apple, Google, Tesla. I'm going to start accumulating them, buying share, and just holding them for the long run. When I say long run, I'm actually looking at easily a 5 to 10 years time horizon. Okay, at least a 5 years. And in terms of some short-term trade, I'll be allocating about 20 to 30% of my portfolio, okay, for some short-term opportunity where I can actually invest in both directions. When the market is going up, I can actually take advantage of it. When the market is going down, short-term trade, I'm also able to generate some profit from that as well. And at the same time, I think we also have to look at divesting into some other portfolio asset class as well. So that's where I'll be looking at investing into some real estate. And at the same time, crypto is something that I have not invested yet. Okay, but again, I do see that the current market price for crypto is actually pretty attractive. It's actually at a very strong support. Just to share, okay, BTC USD. I'm going to just use Bitcoin lah. So I would say that the current support level is actually pretty strong lah. So at current 42,000, okay, for those of you who didn't manage to buy at 60 over 1,000, good lah. Okay, now it's actually cheaper. I can see now it's about 30% cheaper than those who bought it at 63. Okay, again, no offense for those of you who bought it at 63, long term lah. Okay, just hold long term. Right, but for those of you who have not go in, I think at 40 over 1,000, it is again much. Like I say, is it cheap? It's not cheap lah. Okay, and also depends on your time horizon. If you look at it 10 years down the road, where Bitcoin become 200,000, 300,000, then you will realize that whether you bought it at 60,000 or whether you bought it at 40,000, it doesn't really matter much. Of course, 40,000 is always better lah. All right, but if you look at it on a, let's say, 6-month perspective, then maybe in terms of the timing, it's going to be a lot more critical. So again, if you buy for long term, then doesn't really matter. Just accumulate along the years. And yes, so I think Bitcoin current pricing is pretty okay. For those of you who have not gone in. And also, real estate and personal development. These will be some of the things that I'll be looking at. Okay, so here's the Q&A segment. Okay, thanks for all the questions. Question number 1, is Facebook a good buy right now? Personally, for me, I'm a huge believer of Facebook. Okay, why I say that is because the company that I'm actually helping out, we do spend a lot of money. We do give Facebook a lot of money. And if you ask me, can I don't give Facebook that much money? A bit challenging, a bit hard. Okay, I would say that there are many businesses that are still very much reliant on Facebook for advertisement. So it is also something that Facebook is really strong. If you look at the amount of money that they collect, is crazy. They are like super profitable. Okay, super profitable. So I think one of the reasons why it actually dropped significantly is because the metaverse is something that is a little bit still uncertain, and I think every year or every quarter they are burning 11 billion. Okay, 11 billion. So that is something that triggers a lot of investors like, wow, you are burning so much money, So again, if you ask me, I think Facebook understand one thing is that moving forward, the next 5 years to 10 years, they cannot continue to just do what they are doing. Okay, I mean, there will be a lot of other platforms that will pop up along the way, and all these people are actually in a way going to corrode and snatch some of the Facebook market share. So I think Facebook is actually very forward looking. They are already looking at 5 years down the road, 10 years down the road, okay, what is going to be the trend, okay, and they actually want to be ahead of the other competition. Okay, and again, if you ask me, are they in a good position to explore all this? I would say the answer is yes. Okay, the answer is yes. Okay, because they are so cash rich, they are so profitable that they are using only like 10-20% of their profit to burn and invest in the future. So again, metaverse, we all know that it's actually going to be huge lah. Okay, how big the metaverse thing? I mean, we have to understand when you're looking at tangible things, there's a limit to how much money can be made lah. When you're looking at intangible thing, okay, anything is possible. Okay, anything is possible. So again, like I said, I think the overall total addressable market for metaverse is going to be super huge. Probably one of the biggest industry moving forward, and Facebook being one of the early mover, I would say that it's actually something that I am personally optimistic lah. And of course, with the current share price drop 20%, the current PE ratio, let me just take a look. Facebook PE ratio. Facebook PE ratio at 17. Okay, again, it is pretty no-brainer. Okay, it's a pretty no-brainer. Let me just share with all of you. Based on, okay, again, we look at comparison. Okay, just now as I mentioned, we want to look at comparison, right? Let's compare Facebook. Okay, so now y'all can also see where I get all this information. If you look at Facebook valuation, right now it's at 17. Okay, can see 17. The 5-year average for Facebook is 30. So it's almost like 50% of the average. Okay, so yeah, it's actually very, very number one is very attractive in terms of valuation. Number two, I don't see them spending 11 billion as a bad thing. In fact, if this company is not spending money, it's not growing, to me that is a bad thing. So I think this is actually a very good case for Facebook lah. And Facebook is not new to having such massive drop lah. Okay, they have a lot of bad news and things like that over the few years. But again, they have always emerged stronger. Okay, Google, buy before stock split or after? Good question. Good question. Basically, if you see that this company will continue to go up, then before or after, both also can buy lah. Okay, so for Jackson. Again, depending on your time horizon, like I say, if you hold it long enough, basically, before and after doesn't really make much difference. C Limited seems really cheap right now. Okay, C Limited actually I didn't really take a good look at it lah. Okay, one of the key reasons is because I think they are relatively new in terms of earnings. They are still growing a lot lah, but they are not like profitable. So of course, if you ask me, like some of the companies that I've indicated earlier on, some of the mega cap, I go for companies that are a lot more predictable, like Facebook, Apple, Microsoft, Google. This company are a lot more predictable, and you can see that they are still growing really well lah, and of course they are profitable. And now let's take a look at C Limited. I haven't really taken a look at it lah. Okay, but I think one thing you can see that this is a company that is growing very, very fast. So revenue growth is definitely something that we want to focus on and not earnings per share. But let's take a look at free cash flow lah. Okay, I think one of the good signs that a company is going to turn profitable is, of course, the free cash flow has turned positive. So which means that now they are able to generate positive cash flow, which they can then start to reinvest back. And of course, let's take a look at the financial health. Okay, 0.51 to me is pretty decent. Okay, for a company of this size. So at least they are not in huge debt. So let's take a look at valuation. The only thing that we can look at is based on price to sales lah, instead of looking at price to earning, which you can't even get. Okay. So if you look at the price to sales at 9.7, usually I would say that anything below 5 lah is something that will be attractive lah. Okay, but of course, like I said, this company is relatively new as well, so you don't really have a comparison based on the last few years. So let me just take a look. If I were to look at the valuation, yeah. So again, For SE, maybe you might want to just take a look at the chart itself lah. Okay, let's just take a look at the chart. Okay, yeah, so you don't really see an obvious support. Okay, but one thing that you might be able to see from this particular chart is very obvious. Like, I can see that this company is actually is in a downtrend. Let me just draw it for all of you. You can see, right, it's actually going down. If you cannot see, then I cannot help you already. Yeah, let's just draw two line. Okay, so you can see that this company is actually heading down in this particular trend, downtrend. So one of the way that you want to see if this company is in a way reversing is that, first of all, it has to bounce out of this trend. Okay, so it might actually go out, come down again, but you want to see that ultimately, right, this company is going up. Okay, so I will continue to watch it. Okay, I don't mind being a little bit late lah. Even if I were to buy at 180, okay, you can see that even if you bought it at 180, you are still entering at a very good price lah. You still have a 100% potential gain, okay, as compared to those who bought it 1 year ago, or half a year ago. Okay, so this is something, like I said, for us to take note lah. C Limited is cheap, right? But again, don't forget that cheap can be cheaper lah. For those of the people who has been telling me Palantir is cheap, and all the tech companies is cheap, now it's really cheaper lah. Okay, yeah. So unless number one, either your time horizon is long enough, you don't really care, you got money to continue to pump in and hold it. If not, I would suggest for you, if you are looking for some short-term, mid-term profit, then wait for a while more. Okay, wait for confirmation of reversal. What are your thoughts on AMD and Microsoft after the earnings? Yeah, I think AMD has got really, really good earnings. It really shows that they are doing really well in terms of the what they are able to generate in terms of the CPU space. And one of the reasons I would say why AMD actually do very well is also because of the data center, and of course, yeah. So this whole market is actually really growing much faster than a lot of expectation. Okay, so which means that there are a lot of demand for high-end, high performance chip and again, like I said, I think AMD has really secured itself as one of the key leader okay, in terms of this area, together with Nvidia Intel hopefully will be a turnaround story. Okay, Intel end of the day is still a very huge US brand. They have a lot of potential, but it's more of a turnaround story for Intel. Will they be able to turn around? But at least for now, AMD, Nvidia is like the two big player in the chip spaces. Facebook good to sell put? Yes, of course. The answer is yes. The answer is yes. I mean, like I said okay, if you sell put now, even better, because why? The volatility is very, very high. So you get to collect even more premium. Even amazing. Is IVOI delta important when selling put? Not really important. As long as you're happy with the ROI, then okay. So don't really have to bother. In fact, OI totally not important. Delta totally not important. IV is just an indicator. High IV means that premium is going to be higher. Low IV, the premium is going to be lower. So as you can see earlier on for Square, the IV is 90. Okay, a solid company, let's say today we invest into Berkshire Hathaway, the IV is about 30%. So the higher the number, the more volatile the market is going to be. So when you want to sell put, you want to sell put where the IV is higher. So it's just an indicative percentage. Palantir, you think a good buy, any potential? Personally, for me, I love this company. Okay, not saying I love but I mean, if you look at the numbers, if you look at the contract that they have, if you look at the potential, everything seems good Okay, the only thing that's not good is the trend Okay, yeah, I've been looking at it I can see everything is good except that it's going down, down. Now it seems like it's going to come back up, but again, like I said, it's not confirmed yet. Okay, it's not confirmed yet. So I would say that okay, this point will be pretty strong. Let's see if it can actually continue to stay above. Let me just draw some indicative line. So it should bounce up and then comes down again, and then bounce up. Okay, so if you see things like that, then it's good. But again, like I said, earnings is coming. So if the earnings is amazingly good, you never know. Maybe you might see a huge gap up. Or you also never know. Maybe the market just don't like it and the earnings is not as attractive. This company has a gap down below $10. Also possible. Yeah. So again, for this company, I would say that really, unless you are really long term, you buy and then you just leave it there. Otherwise, short term wise, not yet. Short term wise, not yet. What about Intel and AMD? Okay, let's take a look at it. Okay, so you can see AMD, it got supported well at this support area. So right now, let's see if it can actually stay above the this yellow line. If it starts to bounce, I can see it bounce back down, right? It bounce back down. So it has to bounce back up again. So if it does go up, then potentially this will be the next area of resistance. Okay, so if you look at let's say we enter over here. If you go up, about 15% upside. Okay, so some of you, if you know how to do some short-term strategy, you might be able to generate 100% from this particular trade if you're correct. Okay, so I would say that personally for me, because I think end of the day, right, if you look at the share price, the valuation is still on the higher side for AMD. So these are companies that I would only do short-term trade. I will not do long-term. Okay, because I feel that it is still relatively expensive. How about sell put for SPY and QQQ? Okay, so when you do sell put, right, remember you want to sell put for something that is more volatile. Okay, remember volatility is good when you sell put. So for SPY, QQQ, they are a little bit more stable. So stable wise, when you sell put, not so attractive. Okay, I mean, this is again my personal perspective. So I don't really sell put on SPY and QQQ. That's my personal thing. VIX seems to be going back up. Will there be more selling? Actually, hard to say. It's very, very hard to say. Let's take a look at the overall market. You can see that the market has actually recovered a fair bit. Okay, but you can see market always move in this particular direction. Market don't go up that one direction. You go up, then people will take profit. Okay. The thing is, you want to look for this V shape. Okay. You want to look for this V shape. The worst thing that can happen is it moves down. Then good luck. Okay, good luck to everyone. Just kidding. Okay, so again, that's where your portfolio management comes in. Very, very important. Okay, don't all in. Don't like, wow, the market going to recover all in. After you all in, the market drop, then you cry. So yeah, portfolio management is still important. So that's why I think for me right now, I start to go in already. Okay, but I'm only invested about 20% of my whole portfolio, and I don't intend to put in more. Okay, just probably monitor it. Yeah, so this is seems like these are all the questions that I have. Is it say goodbye to Baba? Not really. Actually, for me, I don't have Baba. Okay, but I see I already draw. This particular zone is a very good entry zone for Baba, as you can see. So you can see that the downtrend. Okay, let's just draw the downtrend. Let me just draw some Angkong Kia for you. Yeah, so you can see right now it seems that it is a little bit of a sideway. Okay. So I think again this is something that we have to monitor. Then of course earnings is coming. In fact, when today. Yeah. So let's see what happened to the earnings. So potentially, okay, this stock can continue to go a little bit sideways. If there's good news, then it will start to go up. And this will be a good entry once it moves out of this sideways or even downtrend. Like I said, okay, the only risk for Baba, right, is never about the company. It's about regulatory. Okay, it's about regulatory. This company, in terms of potential, is there. In terms of valuation, super cheap. in terms of yeah, everything is good. Everything is good. The only thing is the uncertainty with regards to the regulatory. So again, when you invest in a company like this, I would say that I think there's potential for us to profit, but at the same time, we want to make sure that our exposure to this kind of company with relatively higher risk is actually capped. Maybe set aside 5%, invest into all this company. Something that you're willing to, let's say, really, China decided to do something, at least maximum you lose 5%. I'm sure you can still sleep with 5% loss, right? Yeah. But that's like the worst case scenario. Of course, if you're right, okay, let's say you're right, what is your potential upside? Let's say you were to enter here. Can you see, just by going back up, you have 100% gain. Of course, like I said, this company it should be worth a lot more, okay, based on the normal trajectory. Yeah. But even if you just go back to the previous high, it's already about 100% upside for you guys. So yeah, something for you all to take note. Yeah, so I think that's all for today. Okay, so again, thanks everyone for joining us for this really random CNY session. Okay, CNY session. Right, so I think very importantly, it's not early anymore. So I think very importantly, I think at the current market situation is still a little bit volatile. So continue to monitor the market. I do see that, with all the inflation talk, whatever BS, end of the day, inflation, is it a good thing or a bad thing? If you ask me, inflation basically means that we have to invest more, okay? Because if your money is sitting down there in the bank, it's going to be very, very bad, okay? Money is getting eroded. If interest rate goes up, is it a good thing or a bad thing? We also have to understand that the Federal Reserve will only increase interest rate when they feel that the market is actually doing well. Okay, so what signifies a good market? Basically, you have low employment rate, everybody is able to secure a job, and everybody is happy. The economy is growing. Okay, that's where they would want to increase the interest rate. If the overall market situation is bad, okay, people are not able to find a job, people are feeling uncertain about the market, a lot of people are having jobless and things like that. When they increase the interest rate, then again, there will be even more bad things that's going to happen. So remember, interest rate go up is actually a good thing. Okay, it basically means that the market is doing well. Okay, so the only thing is, of course, the valuation. They say the interest rate go up, your valuation, everything should goes down. So I would say that if you look at the tech, a lot of tech has already gotten hit about 60-70% from the previous high. So I would say that it has already kind of been factored in because of this potential increase in interest rate. So I don't really see much of a concern. So we just need to make sure that the big players start coming into the market, especially for those of you who are invested into the growth stock. Currently, actually, there's actually this indicator that shows you the big players, the big boys, whether are they coming in or not. You can actually see that all the big players, right, the red color, the big players all run away already. So if you look at some of the company that you all love a lot, Palantir. Yeah, during this period, all the big fish come in, then they run away. Who are the green one? Okay, the green one is the small fish okay, or the ikan bilis That means retail investor like us can see the retail investor getting hit so all the retail investors lose money all the big fish they waiting So again, this is a good indicator when you see red color, when you see the big fish coming back in, the stock will actually move. Let me just show you one very epic case study. You can look at this oil. This is oil. Can you see that the number of big players is still increasing? Okay, then you can see actually the price of this company, Continental, has been going up like nobody business. So okay, again, one of the method is to really follow the big boys Okay, how to get the chart with red and green color? This one you have to follow my page. No, just kidding Okay, you can actually just search for this smart MACD Smart MACD. Let me just put it. You can use trading view lah. Then you just search for smart MACD. Then you can actually see this already. Okay. So that's all I have. Okay, that's all I have. Smart MACD, SMART MACD. Yeah, just you have to use trading view lah. Okay, then you can actually search for this indicator. Yeah. So something very, very interesting lah. So as of now, you can see lah, all the company, still the big boys are not in yet lah. So wait for the retail investor to lose more money lah. Okay, I mean, sorry to say that lah, but again, money must flow lah. Money must flow. Yeah. So all those people that, you know, previously they say they make a lot of money, they have to lose enough money first. Then you can start to come in and make some money. Okay. So with that, okay, I think very importantly for all of us, okay, is to stay educated. And that's why we are doing all this lah, okay, to make sure that you guys actually be educated. Don't follow the market lah. Don't follow what other people are doing. And simply don't follow blindly lah. Okay, always make sure that you invest. You read more, understand the market, and I think very importantly right now is really to have a long-term horizon lah. Okay, so some of the company right now might not be the best time, but if you hold it long enough, you will be the winner. You might be the loser now in the short run. In the long run, you will be the winner. So they always like to say lah, time will tell lah whether who is the winner and who's the loser. So yeah, again, invest into solid company and wait for the long run. I think for those of you who are invested, you will definitely be a winner in the long run. For those of you who are not invested, you're putting your money in the bank account. Okay, maybe right now you will laugh at your friend. Haha, you all lose money, right? You all invest in the stock market, right? 5 years, 10 years down the road, they will come back and laugh at you. Your money not growing. I make a lot of money from the stock market already. Again, like I said, time will tell. Okay, so I would say be very open, okay, to learn more. And I think there's always opportunity lah. So like I say, whether is it the crypto market, whether is it the stock market, moving forward, maybe there'll be another new market. Again, if you're not sure, go and seek help, go and read more, go and understand more. I would say that there's always opportunity for us to make money. So don't worry about, you know, I missed the train, I missed the boat, I missed whatever. Okay, I think there will always be opportunity. So there's something for us to understand. If not, I think thanks everyone for joining us today. So I'll let you guys know when is the next session like this. And of course, wait, before I end off, very, very important one. And of course, for those of you who actually help us to share our video out, I will actually contact you in within 48 hours to get the free online course, right? And for those of you who cannot wait, okay, you want to start learning more. So tomorrow I actually have this webinar. Again, like I said, if you have not attended our options to profit webinar, you can actually learn more, okay, in this 2 hours webinar. So it's actually happening tomorrow, okay. The timing is actually 7. Oops, I think my timing is wrong. Oh no, my date is wrong. But anyway, the link is actually bit.ly/OTP8FAB. Okay, bit.ly/OTP8FAB. I actually put it inside the chat itself. All right, so it's actually happening tomorrow, 7:30 to 9:30. Okay, so this number is wrong. This is our previous date. So upcoming date is tomorrow, 7:30 to 9:30. Okay, just change the date to tomorrow's date, OTP8FAB, everything capital letter. Then you will be able to register for it for tomorrow's webinar. Do help us to share with your friend as well. Okay, I think in current market situation, it's always better to be educated. If not, either you pay school fee or you pay to the market. And history has proven that school fee is always cheaper than paying to the market. Okay, yeah. So of course, for those of you who wants to have a more structured way, I do have a program which I will also share after this webinar. During this webinar itself. So for those of you who wants to have a more structured way of learning, who want to have a community to support you in your investment journey, you know, you can actually join us. And of course, I will have a special bonus for tomorrow as well. Okay, if not, thanks everyone. Thanks for joining us tonight for our CNY special. I hope you all have benefited from it. Okay, so once again, everybody invest safely, stay safe, and I'll see you guys in our next Facebook Live. All right, with that, thanks everyone. Good night and goodbye.